Hey everybody, so just another weekly recap video, but before I move on, I just wanted to thank all my subscribers, and I'm very close to 500 subscribers, which is a pretty important milestone for me. Now, just moving on, I wanted to go and start by just talking about the Fed funds futures. So right now, if we're looking at this, we're at a negative 0.57 reading. So that's basically saying, hey, you know what, if we're comparing the March, or not the March, but the May Fed funds futures, versus the December Fed funds futures, we're seeing this 0.57 spread. So essentially what the market is expecting is that the Fed is going to cut rates twice before the year end. So market's basically calling BS on Jerome Powell. So same thing, nothing's changed here. Market's always calling BS on Powell, but as of now, we're expecting 2 rate cuts based on Fed funds future spreads. Now, moving on, we're looking at the Qs. There is so much going on in the Qs, but let's just go ahead and zoom in right here. So if we're zooming in right there, we got this resistance right there, and this level is the 50% retracement level on the Qs, and that's right around 331.49. Is it possible that we could get there? Yeah, I mean, I think it's pretty probable. I mean, we're pretty close to that already. We're at 325. We even went all the way up to as high as the 327. So to me, that was pretty shocking to see us be all the way up there. But I do think if we do hit this could end up being hard resistance, because you can see in the past, we rejected pretty hard right there. But in the past, we did have this resistance trend line. So right now we are kind of free of that. So if we do get up to here, I would definitely watch out at that 331.49 50% fib level. Now, if we are looking at price action right now, we can see that we rebounded off of this upper resistance trend line. So now it's acting as support. So let's go on a lower time frame. Let's look at the 90-day 1 hour and see what's going on here. So zooming in even a little bit more, you can see that right now we have 3 gaps to the downside. Let me just list those off real quick. That's 316.49, 312.31, and 307.26. Now, another thing that I do want to point out is that we could potentially be in a topping pattern here. So, let me just show you what I think I might be seeing here. So maybe this right here is a shoulder, and then that right there is another shoulder. This could be the head, and then we could be building out another shoulder, and we could be building out a multiple shoulder, head and shoulder. So sometimes when you see a head and shoulders pattern, it's not necessarily just one shoulder, one head, and then one shoulder, and then drop. You could see multiple shoulders, like a shoulder right there, a shoulder right there, and a shoulder right there. But if I'm zooming in closer to where we are right now, just this pattern right here, this could just be a little micro head and shoulders that builds out to be a larger head and shoulder structure. So, this could be the shoulder, that could be the head. Maybe we have another shoulder right here if we get all the way to that 325.73-ish level. And then, this could just play out and fill all of these downside gaps. Now, that doesn't necessarily have to happen. I'm just saying, watch out for a potential scenario like that, because right now, in the past, every single time we got above this trend line, we got right back within it. So if we were to build a head and shoulder structure with these 3 downside gaps, things could get pretty ugly. Now, let me just point you guys out to another thing right here. So let's go back to the 10-year 1-day time frame. So if we're just looking at this, we have this essentially 50-day moving average right here. That's at 312.60. Now, if we were to fill all these downside gaps, that would take us both underneath the 50-day moving average and the lower rising wedge structure, so the support of this rising wedge right here. So things could get pretty nasty pretty fast if we were to break this structure right here. And I do have this anchored VWAP from the bottoms. That's right around 302.49. And then right below that, below all of this, we have this fib retracement level. That is going to be the 23% retracement level. That's going to be at 290.71. And I believe, if we were to just keep falling, this 200-day moving average, it could trend a little bit lower possibly. And then, we could be pretty close alignment with that. So that's something to definitely watch out for if we were to essentially break the structure with a head and shoulders. So definitely do watch out for that. Now, for a while, we have been holding this anchored VWAP, which is from the all-time high, and that's right around 316.31. So breaking 316.31 is going to be the first sign of danger. So moving on, next we're going to look at the SPY. So if we're looking at the SPY right now, we're definitely seeing constant resistance around this 50% retracement level on the Fibs. So that's 413.54. So if we were to get above that and we do start holding that level, definitely watch out for that next level up. So a lot of people are talking about 420 on SPY, but in my opinion, I don't think 420 is all that important. I would say that this next Fib level up here, that 61% retracement level right around 429-ish, I would think that has a little bit more meaning right there, not that 420 that a lot of people are talking about. So let's just go ahead and zoom in on the closer price action right here. So let's look at the 90-day 1 hour chart. So if we're looking right here, we got these two big downside gaps. So there's one right here at 406.23. And, this has proven to be a demand zone right around here from that low 403 area to this area right here. And then right below that, we have another pretty big gap. It's right at 395.51. So we got two downside gaps. We got this small upside gap right here. And if we're going to fill that, that's going to take us all the way to around 415.46. So if we were to fill that and we were to hold this 50% retracement level, I do think we could continue upwards. And by that time, I think the VIX will be totally demolished. So yeah, like the VIX right now, it's pretty low, but if we were to fill this gap and continue upwards, yeah, you're going to see like VIX sub 16. But definitely do watch out for what is playing out right now. It's very possible that this could also be a head and shoulder structure as well, because right here we have this shoulder right there. We have this that could be a potential head, and then that could be a shoulder right there. Maybe we don't fill that gap. So always be predicting these potential structures. They're not always going to play out, but have that in your mind that this could be a potential head and shoulders scenario. So let's just zoom out, see if we could see anything else. Go to the 10-year 1 day. So yeah, we have this anchored VWAP right here from the all-time highs. And let me just zoom in so I can see what that is perfectly. So yeah, that's right at 407.72. And you guys can see that several times when we did cut underneath that, we just bungeed right back up. So, we're seeing a lot of interesting price action here, especially with just how long we have been in this consolidation range. So we've been in this consolidation range for well over 40 days now. So it's going to be interesting to see whether this is accumulation or whether it's distribution. In my honest opinion, I kind of trend more towards that. It's distribution, just because of essentially where we are with valuations and just the state of the economy and where the interest rates are. I find it hard to believe that this could end up being accumulation. But if it is distribution, oftentimes before you see that one massive leg down, you're going to see one blow off top rally to just suck everybody in. So just definitely watch out for that. And maybe that could be that rally to 420 that everybody keeps talking about. And then, maybe that 420 is an important level, a psychological level. And then, when we hit that, it just completely just crushes everybody and we get this massive leg down to fill all these gaps. So that's like the bearish dream. But, right now we're in this consolidation area. We've been in it for over 40 days now. And, we maybe could continue being in this range for quite a long time. So I do want to talk about this just a little bit more. So let's just zoom out. Let's go over to the 10-year 1 day, which we are on. And let's just move this chart over. So if we're looking at this consolidation period, this was way back in November. So this was way back in November of 2021. And I remember, a lot of people were saying, oh my God, valuations are so frothy right now. This market is going to crash. This is a massive bubble. And, they were saying this and that. And then they were talking about interest rates, blah, 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 blah. So you guys can clearly see, hey, you know what? We are having this massive rally, but there's this huge distribution period. And you were seeing some massive, massive, massive swings in between this. But this all ended up being distribution. And this distribution lasted an entire quarter. So this was almost like a 90-day distribution period. And then finally we flushed. So, it could be possible that this distribution lasts an entire quarter. I don't necessarily think it will, but, definitely do be cautious of that. If you are betting against this market, make sure you have some time on your side, because this consolidation could go longer than, it could last longer than your sanity. So always be mindful of these things. Now, I do want to watch out for some other indicators. So let's look up RSI. And let's look up MACD. Let's see where these two things are at. So if we're just looking at RSI, it's a big nothing burger. We're right at 52.3. So that's pretty neutral. I mean, we could maybe sell off a little bit. We could rally a little bit. And, it wouldn't matter a whole lot. And if we're just looking in the past, we didn't necessarily get to 70. So in past bear market rallies, we did hit that 70 level. And this one right here, this one was a little bit more unique because we didn't hit that 70 level. So when we do hit that 70 level, you tend to see a big sell-off. So right here we saw it, right here we saw it. And right back here, you didn't really quite see it as much because we were in this really bullish phase right here. And this was when we were just seeing QE to infinity. So, when we do hit these 70 levels or very close to it, then that is when you're more likely to see these massive sell-offs. So we saw it right here as well. So definitely do watch out on RSI. As far as MACD goes, it's kind of just, it's being very tricky. It's going, it's crossing under, it's crossing over, it's just pretty much touching. So essentially you're seeing a lot of uncertainty here, because MACD is constantly just revisiting that signal line, even though it is underneath it right now. So as of right now, this is a slight sell signal. So do be cautious of this turning into a buy signal, because yeah, that could end up us filling that gap right there at 415.46. Now moving on, let's go ahead and talk about Tesla. So Tesla, it's a little bit interesting, but ultimately what we're looking at is just these fib levels right here, and I'll just go ahead and discuss them real quick. So as of right now, we're having trouble getting above this 173.40 level, and that is the 38% fib level. And support is looking like this fib level right here at the 50%. That's right around 197 or 159.73. So essentially, we're basically just moving between this range right here. So between the 50 fib and the 38% fib. So as you guys can see, we did shortly rally above this, but we couldn't hold it. So what you want to see is you want to see several closes above this fib level to be a little bit more reassured that we could see some continuation of the move. But if we're just going there intraday, and we're closing below that, that's not necessarily bullish. So I definitely do want to point that out to you guys. So as of now, we haven't quite filled this upside gap. If we do want to fill this gap, it's going to be all the way around 179.71. And then we also have this downside gap right there. And this downside gap is right around 161.56. Now, there's another thing that I forgot to put on this chart. So I'm going to go ahead and do that real quick. Is that, we do have this resistance trend line going on. So I want to go ahead and draw that real quick. So let's go ahead and get our drawing tool. I believe it starts right around there. So yeah, right around, let's see. And right around there, that is our resistance trend line. So as you guys can see, we're not quite holding up here. So we've had a false breakout right there. we had a false breakout right there. And then every single time we do have these false breakouts, it essentially leads to a pretty substantial sell-off. So, is this turning out to be another false breakout? And you guys can also see these anchored VWAPs that we have right there. So if you're seeing right here, we did hit that anchored VWAP and we rejected pretty hard. So right now we're at 167.98. So we're essentially just kind of floating between those two fib retracements levels. We rejected this anchored VWAP right there. We rejected this resistance trend line right there. So as of now, I wouldn't necessarily say things look all too great for Tesla, but we could go ahead and we could check the MACD and RSI as well. See if there's anything hidden here. All right. Oh, forgot the RSI. Okay, so let's take a look at this. So if we're looking at RSI, it's a little bit oversold. I mean, that's giving us a 46 reading. If we're looking at MACD, this did do a bullish crossover, but it's a very slight bullish crossover. So, this could easily turn back over to bearish. So in the past, I was talking about Tesla being a little bit oversold. So we did hit that 30 RSI, which should have been a good sign for you to definitely not be shorting it. So you do not want to be shorting when RSI is that low, especially on Tesla, because Tesla, you tend to have these RSI swings from 70 all the way back to 30 and then back to 70. So, maybe this is part of a larger rally, but you do want to see some confirmation. You want to see us get above that resistance trend line. You want to see us holding that 173.4 38% fib retracement level. So you definitely want to see us holding that. And then even better would be us getting above this 50-day moving average, and that's going to be right at 179.36. If we get all of those three scenarios, then yeah, I think that move to the next fib level could be possible, and that would be right around 190.31. But another thing to note is that gap fill is very closely aligned with the 50-day moving average. So that could act as very hard resistance if we do get above that fib level. So now moving on, let's look at Meta. So, Meta's pretty interesting here. So if we're just looking right here, price action is at 233.81. And we did have this 50% retracement level right here, and that was at 235.94. So we momentarily got above that, but we essentially couldn't hold. So in the future, you do want to see us get back above this level. If you are bullish, you do want to see us hold it, and you want to see us have continuation of this support trend line. So it's very possible that in the future, if we do break below this support trend line, we could see a pretty nasty pullback and then possibly some consolidation of this massive move that we've been having. We have huge downside gaps. So just this first downside gap alone, that would take us all the way down to 213.91. And then we have several more below that. I mean, I'm not even going to mention that. Let's just look at this first gap getting filled first. And we do have these anchored VWAP supports. That's going to be right around 220.77. And then we got this another anchored VWAP support right there at 197.35. Let me just zoom out a little bit so you guys can see where these are anchored from. So if I'm going on the 10-year 1 day and let's just zoom out, you can see that these are coming from the COVID high and COVID low. And then this is coming from the all-time high. So when we're just looking at where these are going, these right here are aligning to that 221.75 level. And then this right here is aligning to this right there at 197.35. So another thing to pay attention to is that this 200-day moving average is starting to curl up. And this 50-day moving average is just blasting higher. So, right now the 50-day is at 211.89. The 200-day is all the way down here at 158.92. So this 200-day moving average is pretty much just lining up with this fib retracement right there at 2360. And obviously right now, Meta looks pretty darn bullish, if I'd say so myself. But like I said, definitely do watch out. If this support trend line gets broken, some nasty things could happen. But the ideal situation would be some consolidation of this move, a pullback, and then just some consolidation for a little bit, and then we see another leg higher. That would be the ideal scenario. So we would want to see some sort of bull flag playing out. But in my opinion, if we do break this trend line, I think we could see quite a bit of consolidation, because you have to think that this move was pretty massive. This was a massive move. This is going all the way from 88.09, which is at the bottom, to where we are right now at 233.81. So yeah, this is almost like a 3x. That's very close to being a 3x. So in my opinion, the consolidation could end up being for quite some time, just to digest this massive move that we had. So now moving on, I want to talk about Microsoft. So Microsoft also looks bullish as hell, but you definitely got to be mindful of where we are right now. We've had a pretty substantial rally from the bottom. I mean, from that bottom, that bottom was right around 213.43. Right now we're at 308.97. So as of now, this essentially broke out of this rising wedge structure, and it's kind of right in between these two fib levels right there. So for resistance, we got 320.39. It's also possible that we could see some resistance at this former high, and that's going to be right around 216. And support could be right here at around 297.52, as well as the top of this rising wedge structure right here. So if at any point in time we do break back below this rising wedge structure, I think we could see a pretty substantial fall. So we do have this massive earnings gap, and if we were to fill this gap, that would take us all the way back to 276.17. So that would be quite the drop. But as of now, we are above the 50 and the 200, and we got this support right there, which is that resistance trend line, which is now acting as support, and we got that fib retracement level. So if we do start breaking underneath that 297.52 level, I think it's very possible that we could essentially test the top of this gap zone. So if we're looking at the top of that gap zone, that could be right around 294.46. So definitely watch out for that. Now let's go ahead and actually before we move on, let's look at the MACD and the RSI on that. All right, so if we are looking at the MACD, the MACD does kind of look a little bit bearish to me right now. If you're just paying attention to this right here, you can see that we're kind of at these prior high levels on the blue line, and then we're almost about to cross underneath that signal line. So this is about to give us a bearish impression right there. So definitely watch out on Microsoft. I think it's getting just a little bit risky right here with that MACD right there. If we're looking at RSI, it's about 63.54. So if this RSI does cross over, I think we could see a little bit of selling going on in Microsoft. Maybe we could just go all the way back to this trend line. But if we do break underneath of this trend line, like I said, we do have that fib level. If we break underneath that fib level, then yeah, things might get a little bit nasty there. So definitely do watch out for Microsoft. I think it's due for a little bit of a pullback here. Now, if I'm looking at Apple, there's a lot going on Apple, but let me just kind of simplify it right here. So right here, we have the support trend line. You can see that it's going back quite some time. That is essentially where we just rebounded off as of late. So let me go to this 30-day, 30-minute. You guys can clearly see that when we did have that massive gap on earnings, this is essentially where we ended up right there on that trend line. Look where we rebounded right here on this trend line as well. So, if we do get underneath this trend line, we obviously have this rising wedge support trend line right there. And then, even below that, we have this trend line right there, which is that prior resistance trend line. So there are a lot of supports on Apple as of now. But the one thing that I do want to note is that we're back in this wedge structure. So and we also do have 3 gaps to the downside. So let me go and zoom out again so you guys can see this more clearly. So we were temporarily above this rising wedge structure, but we're right back in it. But like I said, we did rebound off of this support trend line, and we do have this prior resistance trend line that could act as support if we do end up falling out of this wedge. So there are a lot of supports on Apple, but like I said, there's also 3 downside gaps. And if we are looking at the 50-day, the 50-day is all the way up here at 162.38. So even if we pull back down to that, I would still think that Apple is still pretty high. So in my opinion, I wouldn't want to be buying Apple here. I think it's a little bit expensive. But let's go ahead. Let's look at the MACD and RSI as well. So if we are looking at RSI, RSI definitely got a little bit frothy here. It was almost at that 70 reading, or I think it actually made it up there. Let's zoom in a little bit. Oh yeah, so it was pretty much there. So you guys can see that it was pretty much there, but now it's at 62.25. And if we are looking at the MACD looks very similar to Microsoft, where it does look like it's very close to crossing over. So if we do see this MACD crossover, do be careful because that could signal some sort of pullback on Apple here. Now let's go ahead, let's move on. If we're looking at Google, Google was very, very interesting. So I mentioned this in my past video, and I just want to bring up the last week's notes on Google. So let me just bring that up real quick. So last week I mentioned that Google had this 109.60-ish fib level and a golden cross scenario playing out. So golden cross is essentially when you get the 50-day crossing over the 200. So what I said in my last video was, hey, you know what? If we get over this fib level right here, that 38% retracement level, right at 109.57, we could see some sort of massive rally. So what we were seeing right here was consolidation, and we saw this basically golden cross scenario, and then we saw a massive run up here. So we got above this retracement level right here, and then we actually essentially made it to this next retracement right here. So now we're at the 50% retracement level, and we're ever so slightly above it right now, but you have to watch out. You want to see, can we hold this retracement level? We also broke above this all-time high anchored VWAP right there, and you guys can clearly see. So let me just zoom in right here. So okay, look, you can see that we had this massive rally, then we had this gap, and look where this anchored VWAP is going through. It's going right through that gap right there. So this in the future is likely going to act as support. So this right here is right around 113.46. I would not be surprised if we pull back to that level. So definitely watch out for some sort of consolidation of this move. So I want to show you just how big this move was. So let me go back to last week. So last week I was saying, hey, you know what? The expected move is about $4, okay? So a 2 standard deviation move on this to the upside, that would have been 114. But we essentially made it to 118. So that is a 3 standard deviation move. That is huge. This wasn't even on earnings too. So this was a pretty big standard deviation move. And you can damn well expect that the RSI is high. So I want to go ahead and point over to that. So let's go ahead. Let's get the RSI right here. And let's get the MACD. So honestly, this setup was pretty darn good. I didn't get into it, if I'm being honest. I was a little bit busy, and I was essentially paying more attention to SPY and the Qs versus these individual stocks. So honestly, if I'm being honest, even though I called it out, I didn't get in on it. So I wish I did, because this was a pretty damn good setup. So if we're looking at the RSI, it's very, very, very frothy right here. It's essentially over a 70 reading right now. So it's overbought, very overbought right now. And if we're looking at the MACD, yeah, it's very bullish. It had this huge bullish crossover. So as of now, I would expect some potential, basically some potential consolidation of this move. because RSI, like I said, it's very, very, very high. It needs to pull back just a little bit, or it needs to just go sideways for a little bit just to cool off these overbought conditions. So I wouldn't necessarily be going long here unless you like theta decay. It's very possible that, we could rally a little bit higher, but if we do, I would get very, very cautious because like I said, the RSI is way up here in overbought territory. If we were to have another substantial rally, I would think that the next level is probably that next fib level right at that 61% retracement, which is right around 125.72, or possibly this prior top right here. And if we were to get to that prior top, that would be right around like that 123, 124-ish area. So definitely watch out. My personal opinion is that it's more likely that we do see some form of a pullback to essentially correct some of these overbought conditions. So as of now, I would not be getting any short-term calls or whatever on Google, just because, like I said, you could see that data burn right there. Now, moving on, if we're looking at Amazon, I think Amazon is a very similar situation that could potentially play out like Google. So we do have this 50-day moving average. It's in a strong uptrend. We have this 200-day moving average, which is starting to flatten out. So we could see that golden cross scenario in the future. And right now we are above this resistance trend line right here. So you can see that this was acting as resistance and support plenty of times. So support right there, resistance, 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 false breakout, resistance, resistance, resistance right there, resistance. Now we're slightly over it. So the key thing that you want to pay attention to is, do we stay above this support trend line? So now it's support, it's not resistance anymore. So now it's support. Do we stay above the support trend line? Do we stay above the 200-day moving average? The 200-day moving average is right here at 106.23. We want to hold this level, and we want to stay above this trend line right there as well. So, this could be potentially playing out to be a massive bullish scenario, or like I said, it could be a very bearish scenario if this is a false breakout. So these are the things that you want to pay attention to. Can we hold this 200-day moving average? Can we stay above this support trend line? If these two things do happen and we rebound off this support trend line, then yeah, I would think that the next potential bullish area that we could go to is this 122.14 level, which is the 38% retracement level. So this is something that I would watch out for. Now, the interesting thing is that this also aligns with the all-time high anchored VWAP right here. So in my opinion, this will be a very strong resistance, but at the same time, we could have that golden cross scenario. So, maybe we have this massive run up to this level and we consolidate for a while and then we can break above it. But as of right now, I'm not necessarily bullish. I'm not necessarily bearish. I want to see the scenario that I mentioned play out to be bullish, or I want to see the scenario that I mentioned to play out to be bearish. So right now, I do think that it is a little bit more on the bullish emphasis, just because we have these moving averages acting as support right here. Now, if I'm looking at a shorter time frame, we do have this gap fill right there. So if we were to come back and fill this gap, that would be basically saying that this is a false breakout. So that is the risky scenario that you want to watch out for. So as of now, it's a little bit hard to be bullish or bearish. If I truly had to say, I'm leaning slightly more bullish. But yeah, like I said, I want to see us rebound off of this trend line and then continue higher, stay above that 200, and yeah, definitely stay above that 50 as well. So moving on, let's look at the dollar. So the dollar is pretty interesting right now because we did have a little breakout. So let's go ahead. Let's look at a shorter time frame. So there's a lot of things going on with the dollar, especially with gaps. And generally gaps on the dollar get filled pretty quickly. But as of lately, we've just been leaving gaps all over the place. So we have several upside gaps. We have this upside gap right here. And that would essentially take us all the way to 103.65. Another one right there. That would take us to 105.37. Another one all the way up here. That would take us all the way to 105.63. So as you guys can see, we broke out. And this is a pretty strong breakout. So as of now, this is looking a little bit more bullish, but look what happened. We left 2 downside gaps. So we got 2 downside gaps. If we want to fill these, this is going to be right at 102. Another one right there at, let's see, what is that? 101.47. So 2 downside gaps, 3 upside gaps in the shorter term. And another thing that I do want to point you out to is let's go back on the 10-year 1-day. And let's just look at the MACD right here. So MACD right now does look a little bit more bullish than bearish. But I do think in the shorter term, we could potentially see a pullback on the dollar. Because when I go on the 30-day, 30-minute, and you're looking at the MACD does look like it wants to turn over a little bit. The RSI is very heavily overbought. So in the shorter term, I do think we could see a pullback. But is that pullback going to close all of these downside gaps? And then this just turns out to be a false breakout. Because if that is the case, maybe tech is going to see a massive rally if tech is still correlated to the dollar, which in this scenario, I still do think that tech is heavily correlated to the dollar. So let's go ahead, let's move on. So let's look at the VIX. So the VIX is being very, very annoying right now because, it's just consolidating around this longer term support trend line. So let's just kind of zoom in and see what's going on here. So you guys can see that, we hit right here, we got above, we hit right there, we got above, we hit right there. So in my opinion, this could potentially be a inverse head and shoulders. So you guys can see the left shoulder right there, the head right there. This could be building out a right shoulder. Now, if this were an inverse head and shoulders, we could go all the way up to this resistance trend line. So this could be pretty nasty scenario that's playing out. So if you do want to see an invalidation of this, you would want to see this shoulder play out a little bit longer, or you would want to see us break below this prior support right there. So you will want to see us break that head level so to invalidate the structure. But if we were to just rally right off of this level, that would look very much like an inverse head and shoulders on the VIX. Now let's go ahead, let's look at a shorter time frame. Let's look at the 30-day, 30 minutes. So we do have this downside gap. It did get filled. And notice that, it got filled once, but then we came back and we retested it and then we rallied again. So to me, that's telling me that this level is important. And that's right around 1635, where we essentially just rebounded twice. Now we have this huge upside gap that's going to be right around 1951. So definitely watch out. We could have that inverse head and shoulders that I did talk about play out, and we could fill this gap right there. But if we do fill that gap, what's going to happen? Are we going to continue higher, or are we going to essentially crap out? If you are bearish on this market, I would not bet on it going higher. I would take some sort of profit right there if you are bearish and we see this gap fill, because you don't know what is going to happen in this market. This is a kangaroo market. When you get those profits, take them as they come, or take some of them as they come. Don't just let a bearish day or a bullish day go to waste. So that pretty much concludes my analysis on the technicals, and I just wanted to bring up the following week weekly expected moves, which I have right here. So go ahead, take a screenshot if you need to, but let's just quickly summarize everything. So I have all these additional notes right here. So if we're looking at Apple, the MACD buy signal is starting to curl over. It's looking a little bit weak. It might give us a bearish crossover. And same with Microsoft, we're getting that similar situation. If we're looking at Qs, we got three downside gaps. So I should go ahead and correct that. So we got 3 downside gaps, and we have resistance at that 331.58 fib level. That's the 50% retracement. If we're looking at SPY right here, we got resistance at that 50% retracement level, 413.55, and 2 downside gaps. So what about Tesla? Tesla right here, it's got resistance at that 38.2% fib level. That's 173.40, and support at the 50% fib level. That's 159.73. What about NVIDIA? So NVIDIA right here, we got resistance at that 79.6% fib level. That's 194.84, and we're sitting near a current support trend line. If we're looking at Google, we do still have that golden cross in play, and resistance is at that 50% retracement level at 117.65. With Meta, we're at that resistance at the 50% retracement level, 235.94. And IWM and DIA, I didn't really cover these, but if we are looking at the IWM, we are in a wider head and shoulders pattern. So let me just bring that up real quick. So you guys can clearly see shoulder, head, and then shoulder. So we are in this wider head and shoulders pattern. If we were to close off that shoulder, that would essentially take us all the way back to those lows right around 162.50. So definitely do watch out for that. And if we are just looking at the RSI, we are slightly oversold. If we're looking at the MACD right here, MACD is kind of just not really telling us anything. They're basically converging right here. Now, what about the Dow? So if we're looking at the Dow, we have that resistance at the 61.8% fib retracement level. That's 337.84, and support at that 50% retracement level right at 328.06. So let's go ahead. Let's look at that real quick. So as you guys can see, this is what's going on with the Dow. We have basically this playing out right here. So if we are looking at this, we got that fib level right there, that fib level right there. We recently bounced off the 50-day moving average. That's at 331.63, and we got that 200-day moving average right down below that at 327.67. So I wouldn't get too worried about the Dow unless we essentially break this fib level right there, which is correlating with this 200-day moving average right at 328.06. So we're about $5 over that. So as of now, we are still good. If we do break that level, watch out. So that basically concludes this video, and I hope you guys have a great one.